Test. Traders, what's going on? Jamie Saettele here. It is December 2nd. Happy December to everybody. Get started here looking at the US dollar. This is the index from the FXCM, and as posted last night, we had hit support, shorter term support from the structure going back to the August low, 824. Clearly a big day. We have the September high up there, and then of course the October 15th low. So two really big lows, 824, 1015. This structure, you had resistance up here on the 50 line. Pullback. This was NFP day. Since then we've consolidated for, I guess, going on 4 weeks now. This would be the fourth week of consolidation. And support was hit yesterday, and markets traded straight higher. So, I have very different opinions on various dollar crosses right now. So I guess I don't have that strong of an opinion on the dollar in general. But looking at this again, uptrend. This is consolidation. I still think that the bigger high, I know I've been saying it for 4+ weeks, but the bigger high probably comes up here on the long-term resistance. Okay, if we scroll on the weekly, it's clear as day where resistance is. All right, and it's up here. So that would suggest that we do get another push higher in the dollar, towards into this level over the next several weeks into year end. So you could be set up for a dollar blow off or something. Obviously, the next 2 days there's a ton going on. You've got ECB tomorrow, and everyone is pretty much expecting, I guess, them to kill the euro. Been heading down for quite some time. Trade is crowded as hell, and I think that it's gonna end up going absolutely berserk on the upside at some point. When that point happens, very difficult to say. The short-term picture still, this is my problem with the dollar right now, because the short-term picture on euro, here's an hourly chart, right? Let's bring up this chart. It's a little cleaner. All right, go 4 hour, and I did a video on this on the 23rd, which was last Monday, and that's when I guess we were right here. We haven't changed since then. We actually just have a 4 hour reversal bar as I began this webinar. 4 hour close at 1 p.m. Eastern here. So the market continues to probe down here, 105.50 area, if you will. I think today's high is actually like 105.50, and we continue to not go lower after we reach 105.50. Again, as said in that video, we have a raised floor. Okay, the market continues to bottom before it gets to support. In order to get bullish on a swing basis, no change here. Same thing. I sound like a parrot or something, but same thing. You'd have to break the resistance from which you came into the low. All right, and then you would turn bullish until the next resistance, which would probably be this one, okay, which is also in line with what we have termed the golden line, the long-term golden line, right? And that tomorrow is up around the same region. It's kind of in the mid 107s, but as pent up and bearish as the market is in front of Draghi, if there's a disappointment, this thing could really take off to the upside. So, that was the idea as far as getting into Euro Yen long earlier in the week to position ourselves for something like this. And the trade was right. The trade was there. The stop was moved too tight. Story of my 2015 to this point, at least since January. But that's what we're looking at in euro. Okay, so I really have nothing else to say at this point on the euro. It's just, repeating the same thing over and over and over. And if they come out and they kill the euro, then you get down into new lows. Okay, new lows is slopes. All right, but you can see exactly where we are. Resistance right here. The raised floor, though, warning that all is not well as far as the downside is concerned, at least right now. So, and then you got the golden line up here, which is again 107.50 or something. So it's funny. I'm looking at the notes that I made. The notes that I made for last week for the webinar, literally the exact same stuff that I would talk about right now. So here was some of the notes. Dollar, double-minded on dollar. I do like dollar yen higher. It's still the case. Dollar Swiss higher, still the case, albeit on dips. Euro dollar, just short-term levels, trading really intraday. That's still the case. Pound dollar, talked about the TDD time to mark buy that obviously has been not worked, and pound's been kind of a disaster for me. Commodity FX following the gold triangle. So I want to talk about that. The gold triangle, which is I think one of the clearer things that we've got going on here technically in the market. So here, remember the wave count we talked about. We spent a lot of time last week looking at the gold, and haven't really looked at this chart since the webinar last week, but it's the same thing. Okay, and I think this chart probably will help identify an important turn at some point in the dollar, even if it's before the big one. I'm watching, this here. This is still the low 1040s. Remember, low 1040s. That's what we talked about. So let's go to this chart. Okay, so remember this was what we were looking at last time. So here we are, 1043. Maybe we get a little lower. Either way, this is the line that we're watching. All right, you can take a lot of different forms into a low. Okay, like this decline here, this little thrust from that, a lot of people thought that might have been it. Well, looks like it's not, because we rallied back into resistance, and now here we are back into support. Or not support, but new lows. This is not support. Support would not be until down here. If you look at this from here, from 1080, you could have a 1, 2, 3, 4, 5. You could have a diagonal, an ending diagonal into the low. That could take some time, probably the rest of the week, maybe longer. You could get, more drawn out consolidation. Either way, this is the line that I want to pay attention to on gold. All right, down here, and again, it's down a little below 1040 now. But that's the key, I think, to anything near term. And again, on that short-term chart, we're talking about this thing completing 5 waves down from the October 15th high. All right. It's a tricky situation out there right now at the market. Okay, I actually think that we have some pretty good positions on right now. Obviously, dollar yen's kind of starting to finally do something, and that is really one of the only things that seems that great. I love euro yen on the upside. Again, it's really screwed that up, moving the stop. But we were long here. I mean, we were long right here. Moved the stop, and then got stopped out literally right here, and here we are. But I still like euro yen higher. I like euro Aussie higher if it can start to reverse a little bit, which it probably actually just did, considering that just now that, yeah, we have a 4-hour reversal, okay, right here. So I do think that you have to look at, euro Aussie on the upside, euro yen on the upside. On that note, with Aussie, we have the Aussie short right now, and that's primarily, or not primarily, but it is, yeah, Swiss yen said really great. Yeah, absolutely. this is again the long-term resistance, okay, that we've got going on with Aussie dollar. So even if we do have some sort of a low in place back here, this is a level that you expect to trade off of. As I mentioned last night, I'm more likely to look for support, in these commodity currencies on dips. But this is pretty big resistance here. So, as you know right now, we have a couple of positions, short Aussie and actually long Kiwi. Kiwi was just triggered on the short-term chart. So if I take a look at that short-term picture on Kiwi, here you have it. Here's Kiwi dollar. So here's the chart from last night. We actually came right into that, right? So we've come right into support. I do, obviously like the fact that we held right here and made a little hourly reversal. So I'd be looking higher into 67.15, 67.20, at the minimum. And Kiwi is one that if there is a broader bottoming process or something like that underway, Kiwi's a pretty good one. Ripe for a bigger turn, okay? Just go back to the weekly chart, the daily and weekly. This is the weekly, okay? So you get this impulsive move to the upside, right? You get a sharp move to the downside, but counting it as corrective given its 7-wave structure to the downside. The reversal at the low 2 weeks ago was smack dab right on weekly reversal support. That's the close from 824, which is 64.52. The low is a couple ticks below there, 64.29. Okay. Turned up sharply and kept putting orders in to get long on Kiwi last week and earlier this week, and none actually ended up officially triggering on the swings, but I still think there's upside here. Okay, so this is the weekly. Obviously on a weekly chart, you could end up coming back down into 65.50 before going up to 68. Okay, but I do think 68 is the next big spot, okay, for say a more important decision to be made on Kiwi. On the daily chart, you can see why 67.20 could be of interest. I actually have this, not the month open anymore, is it? It's a new month. The month open is all the way down here. No, that's 11:30. What am I talking about? Yesterday. So right now the month open is 65.80. It's virtually the low for the virtually the low for the month so far, because we opened on the first day of the month, made a low. Now this is going to sound crazy, but there are times when you get the open for the month or whatever smack dab right on the low, the high, whatever, right on the open. And if we're in a broader uptrend trending move higher, then maybe that's the case now for Kiwi. All right, that's why I have the stop under here. In essence, you had support here, 66.17. It was resistance here in November down to 66.05. The entry was placed at this level because of that, right? Combination of horizontal levels and slope, okay? And we're basically looking at this line, the lower parallel here, which, as you see, it was never really support. We never really traded on it. If you remember, the parallels from this were actually pretty good as resistance up here, though, and support at one point. So there is, reason to follow this, in my opinion. Excuse me. And this parallel actually ended up coming into play as resistance several times before that final drop into the lows on the 18th. Okay. So for that reason, since it was resistance before, I do think it makes sense to pay attention to it again. And, it's up around 67.40 now. Now you do have this line here that comes down, and that's closer to 67.15 now. 67.20 today, 67.15 tomorrow. So, that would be a region where I'd be, I'll put to take some off that position, as far as Kiwi dollar is concerned. All right. Current market obviously is extremely volatile without really going anywhere, it seems like, in a lot of these dollar pairs. I don't think that's necessarily the case for Kiwi though. Okay, this to me is a breakout move. All right, I know that we're still within a range, but you can see and envision the possibilities that you have here. This broad basing pattern that been going on basically since July, sideways, responding right at former resistance, became support, moving higher off that level in a very strong fashion. It's worth being involved with this idea, okay? Because upside, significantly, we're putting below D-Swan low the first day of the month. All right. And again, the short-term picture at this point does look pretty clean. Really nice responses. This is a shift or a modified shift fork, right? And you've got, well, that was the sliding parallel. This is simply a trend line off of the low here, and then these are associated parallels. So high wasn't quite at it, but lots of action down here on the sliding parallel, which is just below the median line. And guess what? We just bottomed on that thing like to the tick last hour at, I guess, the low of 66.13. So that's a good sign, at least, for being long at this position right here at this spot. Okay, so again, looking higher up to this region before you could see resistance potentially come in again. I know it's tough to like justify being long Kiwi at the same time as being short Aussie. I would just say don't try to justify it. Okay, trade the charts. Look, one of these is probably going to be wrong and stopped out, would be my guess. Ideally, we've got euro taken off 106 here. We were at 105.50, I guess, just about, I don't know, half an hour ago. 106.05, 106.10. If this is a market that I think people are you could get a lot of. We've written some things like this around daily effects, but liquidity problems. Okay, a lot of people potentially trying to exit huge crowded trades. It starts going one way, and you start getting washed out, and stops get run like crazy on the other side of the trade. Okay, so just kind of a heads up on that. For us as chart traders, we're looking at for defined levels and setup. So again, repeating myself, but trade back above here and break that, turn bullish euro for the next level up here, 107.50. So that's bottom line what the plan is. All right, so that is, we looked at Kiwi, like Kiwi on the upside right here, short-term trade, but could end up, going a ways, but 67.20 resistance. Then you could see 68.05. Then it gets a little tricky. Dollar CAD. Well, we are in a similar place that we've been for a while, and this is a bearish sign. Okay, the support line, which was really good support, short-term basis, of course, but support line wasn't really resistance here, went through it, came back below, went through it, came back below. Well, look at the last 2 days. Highs are resistance and resistance. Okay, so just like we had with Kiwi, again, if I go back and we talk about Kiwi dollar here, right? Go to a 4-hour chart. what happened here when you had resistance, right? Resistance became support twice. The second time is when you really took off on the upside. Okay. Well, that could be what's happening now with dollar CAD. Okay. You're getting former support providing resistance now the second time in as many days. Test. All right. Yep, losing sound here sporadically. Okay, I hope you guys didn't miss what I just said about dollar CAD. What I was saying was this is the signal line, okay, and I detailed that last night. But if it breaks down below the signal line, what you're looking for is test. Okay. Yeah, this is annoying. Technology's great over here. All right, so again, if we can break that down here, then that's the signal line, and you're looking for 3150 at that point. So, a breakdown here below that, let's say 33, 3150, 150 points on the downside, 100 plus points of risk on the upside. So it's not great, but again, if you are kind of more aggressive, then you'd be looking for, a short basically right now and just put faith in the fact that you've held resistance, old support twice. And you'd be looking at what? 134.10 as a stop. This morning's high is 34.07. Okay. Moving on quickly to dollar Swiss has been obviously the breakout trade, if you will, over the last number of weeks. So you should watch it closely, especially because we actually are finally coming off a little bit the last couple days. So we're getting into the first support. Again, if you're, trading FX, I think this is probably the most important, one of the more important charts to watch, given the potential for major runs on the upside. First support really is about 102.20. Looks to be about 102.20 tomorrow. The next one is the median line, which was resistance back here on the end of. Gary, hey, what's going on, man? I have not looked at dollar yen yet. I actually will in just a moment, so don't worry, my friend. But here we have the median line, which was resistance on October 28th. Wouldn't really call it support down here. You did drop below it, but it's about 101.20. So basically 102.20, 101.20 are two levels that I think you kind of need to jot down in your notebook or whatever it is. in your mind, whatever, and keep those levels in mind heading into the next 2 days, which are sure to be exciting to say the least. Okay, and I can't stress enough, December can be kind of nuts. You see lots of position liquidations if things don't go perfectly the way that the market's priced in. And with that said, I think there's a real risk of that happening to the euro here. So just heads up. All right. But anyway, draw that down. 101.20, 102.20 for dollar Swiss. Let's move on actually to dollar yen. Gary just was asking about it, and I obviously plan on talking about it anyway. So dollar yen, here we are. I'm going to look at big picture first before we zoom in. Finally making headway here. Hey Raj, what's up? Haven't looked at Euro Aus. I definitely will. So take a look there in a sec. Let's look here. We got hold on. $101.20, 101.80. Oh yeah, sorry. The dollar Swiss levels we're looking at 101.90 and 101.20. I was saying 102.20. That's where we are right now. Okay, so dollar yen. Again, the big picture monthly chart I think is super important. You've got the huge line, and this is I'm keeping this chart up if you've noticed on the long-term page. Yeah, okay, here we go. So the long-term trend lines on dollar yen, the confluence of those, all right, those are still there. Okay, this is published October 31st. Okay, so the fact that dollar yen has rallied, a couple hundred points does not change the fact that we're still at this huge long-term juncture. Okay. Well, when we draw on the weekly or the daily for that matter, you can see that we do have a line that can be drawn across, which is up around 124.30, 124.40, which is up where our target is actually. And the long-term median line is a little bit above there. Looks to be this week about like 24.70. So when we look at the daily, you have this consolidation. This is dollar yen looks most like the dollar index, I guess. For the simple fact that you've had, a pretty clean sideways consolidation. I say clean in the fact that it counts well as a triangle. Hasn't been clean to trade it. It's been very sloppy back and forth, obviously, but probably nearing completion there, and looking higher right now, and for this burst, to get out of the range. So the question is that 124.40, 124.30 region. Is there anything else there? Well, remember, so here's our triangle, and this is the chart you've seen the last couple days in the posts. Okay, so to measure triangle objectives, by the way, not a coincidence, I don't think, that we're seeing triangles in dollar yen and gold at the same time. They both suggest pretty much the same thing, and that the dollar is going to thrust higher against both things, both gold, so gold lower, dollar yen higher, and then we're at risk of turning around again. again, to measure the objectives, take the widest point of the triangle. In this case, that's wave B, okay? And you're going to find the 1618 and 200% extensions, okay? In other words, you're taking 61.8% of this price here, and then 100% of that price and adding it to the top of the breakout level. So the two levels you get are 124.71 and 125.29. Well, 124.70 is interesting because it's the median line. It's the long-term median line. Raj asks, how much time do I spend drawing these charts, or do I have software? Well, this is what I do, my friend. So there is no software for this. This is just, this is my profession. It's my craft. Okay, so 124.70 is the median line, so that's awfully interesting. As far as 125.30 is concerned, that actually is more or less the high from, what is that, from August, 125.28. So those two objectives are in line with levels that you'd expect to possibly, could do something anyway. So here's the question, I guess, trading wise, near term, being on the long side right now, still sideways, as nice as it would be to for me to say, I guarantee that the chart, that the dollar yen is heading higher while above this level down here from last night. I just can't say that because you can't really guarantee anything. It's impossible. But there would certainly still be the possibility of another leg lower, maybe into 122.80, which is the week open, before we went higher. Okay. I would not trade that. I would not, look to short up here for 22.80 and then turn long and, take it up there. But if the market does come off here into 122.80, then maybe you can add to the position again, which is where we're in from anyway, and take this thing higher. Bottom line, dollar yen's going higher, but the levels, again, 124.70 and 125.29, the two triangle targets are in line with levels, one horizontal from the August high and one from the long-term median line, in which we could certainly see the market, actually reverse. All right. When it comes to looking at the markets, yen in particular and euro now too, the funding currencies, you kind of have to get a sense for when their equity markets are going to peter out and start to come off. And so with that, let's look at the S&P 500. This is still bullish. We continue to find supports. Oops, it's not even the right workspace, but I have it drawn there anyway. All right, S&P 500. All right, so that's the weekly chart. All right, so here's the daily chart. Again, we've got, you can see here, what the last two dips, if you can even call them that, but the dips are getting smaller and smaller, so that's indicative of a strong market. At the same time, ironically, it's indicative of a market that's extremely complacent and at risk of getting smoked. Yes, sure thing, Mark, no problem. Raj saying, is it okay to be long euro yen, dollar yen at the same time? Yeah, I don't see why not. I mean, we were long dollar yen and long euro yen at the same time the other day. Just screwed up the trade by moving the stop too tight, unfortunately. So here's the dips that we've, the S&P price action. Again, no matter what you think, S&P continues to find support every time it dips. Okay, and it dips into the median line and rallies. It did that, 2 days ago on Monday, I guess. It did that last week. I guess that was last Tuesday. Okay, so there's still support here to head higher. In order to be bearish on this thing, I'd want to see it get up to bigger resistance, which again is probably up here, 21.2590, and then the all-time high is 21.3710. Or you come under here, under 2084, and look for the market to establish below what you would have as support and breaking support, and then start to look lower towards the next big support, which again would probably be either this line here, which crosses the low on the 16th, or the lower parallel. All right, so not a very definitive thing to say at this point about the S&P 500. I will say, obviously, you've got ECB tomorrow, so Draghi. There is a tendency, and I've talked about this several times in the last few months, but there's a tendency on, ECB days, central bank days, whether it's ECB, Fed, BOJ, whatever, if something happens, for the knee-jerk reaction to be higher in the equity indices, and then they basically make their top on that news. All right. So with us looming at these levels right now, that's maybe something that could happen. The big resistance again is higher up here. Have it circled. That's a possibility. Here is the Nikkei. Similar story in that we are still headed, we're still in a kind of a bullish area. Not doing a whole lot today. Okay, we had a big move up yesterday, and the Nikkei and the dollar yen actually aren't really trading that well together right now, for whatever reason. You had a big move up yesterday. Dollar yen really didn't do anything, and then Nikkei is not doing anything today, and the dollar yen is up pretty good. So take it for what it's worth. At the turn, something will happen, more than likely. But right here, again, middle of nowhere as far as the Nikkei is concerned. So on dips, you're looking for support. Okay, still looking for support, I should say. And on strength, you start to think about going the other way, which would also mean, of course, turning bearish on dollar yen, but at higher levels. So that would be this line here, which crosses the last several important highs, okay, followed by the upper parallel. Not sure if we get all the way up there or not, but this would be the one I'd be paying attention to the closest. Okay. Finally, the DAX. Still the cleanest one, as it has been for some time. And I wrote back in a couple weeks ago about just a quick comment on the euro. The fact that we had no reason, right? Here's euro. Okay, we looked at that already. This was from 11/22, so it was a couple weeks ago. But again, the euro's gone sideways for a while. So working slopes are all bearish, but it was a headline about the euro not possibly going higher. Funny thing is, think of a damn good reason for euro to rally. It's the DAX. Okay. Well, we'll expand on this as action warrants. Well, action warrants it right now, my friends. Here we are. Here's the weekly DAX chart. Okay, look where the high is this week. Median line, median line. We've seen good sell-offs from this median line, okay? We've seen support at this median line too. So we've had a big run higher in the DAX, and we're, getting up into resistance now. So here's the daily chart. You can see us rolling over though. All right, even, close-up view. So interestingly, the euro, against the dollar, the exchange rate actually just made its low and reversed. It's up about 50 pips from where it was at the low. It reversed today. All right, so if this relationship, it turns, is going to hold, it doesn't necessarily happen right away, but when you get a big move, like a big move lower in the DAX and a big move, that's going to force the short covering in the euro, because the euros have to be bought back. Again, we've talked about the hedging and everything else that takes place. with that, with the with the euro and DAX relationship, with it being a funding currency now. So this is, I know that there's no reason fundamentally, right, to be long the euro. Well, this is as fundamental as it gets. Testing, testing. Okay, we're back. Sorry, I'm trying to keep my eye on that. Thanks, guys, for bearing with me. I know it's probably super annoying. Here's the parallel, too, that you probably want to watch off of this one. It's right down here. As far as DAX is concerned, my focus really, as far as the euro, is just on that damn line on that chart. Right? Get us going up here a little bit of this, a little bit of that, a little bit of that. That's what I'm thinking happens with the euro. At least that's how I draw it up in my playbook. All right. So nice 4-hour reversal there with the euro, right on the lows. Interesting. What would it be? 105.50, 106.35, 106.40, 105.50. So 90 pips. It would actually put you up around it would put you up here anyway on the measured move around 107.30. But obviously, it could be a much more important turn, at least possible. All right. I don't have a whole lot. Raj asking, am I long? I actually am. I have some longs, but I put a long on with like a really big ass stop. Was buying euro earlier today with a 104.50 stop. So it was, I'm not like, I have like my entry right now is 105.80, so I'm not like, it's at 106 right now. Yeah, but that's where I am right now, Raj. Looking at some of the crosses, let's look at, say, Euro Aussie. Targets, Raj says, man, whatever the euro wants to give, I'll say that the test comes on here on this line, which was resistance. Let's not forget how important, that line is, that level is, right? It really is big. I mean, the weekly chart will show it, okay? Yeah, here it is. So, it was resistance, support, resistance. That line is up here. If we get back above there, then, things could certainly change for the better as far as euro dollar is concerned. Oh my goodness, I forgot to show you this chart on euro, so I wanted to show you this because this is pretty interesting. The long-term chart of euro, monthly chart. Talk about sliding parallels. This could be the sliding parallel of sliding parallels. All right, so there's that, okay. Go to a week chart, kind of zoom in a little bit. This is a monthly chart. All right, so that was the 30-year picture. Kind of zoom that, put that over there, and that's where we are. So look at that. So we're talking about a 30-year trend line right here. This is a 30-year trend line in bold, okay? And we're just sliding that parallel from the low that was made back in March. And this is the weekly chart, okay? Go to the daily chart even. And there's the daily picture, okay? So here's the 30-year trend line in bold. Extend the parallel off the March low, and look at what we're doing. We've traded around this thing like crazy now for the last how many days? Well, we hit it on the 25th last week. We hit it on the 27th. We closed below it 2 days ago. We ripped like crazy yesterday, and then we hit it, and we were back above it right now. I mean, don't have to tell you that there's a lot going on right now, and that there's some big decisions that are going to be made around this area in the marketplace. Okay, so leave it at that. I just wanted to share that with on Euro because I think it's pretty interesting, to say the least. All right, so we'll move on to a couple crosses. Some of the crosses that are obviously interesting, some of the ones we've mentioned recently. I want to focus on Euro crosses. I think they look bullish to me, right? Euro Aussie, for example. I did that video last Friday on IDO, and it hasn't. Nothing's really changed there. Again, the Euro Yen trade, that's screwed that up. That's my bad, but I still like it higher. The Euro Aussie position, we don't have a position, but as Mark just mentioned here, yeah, Mark said, yeah, it's not far from a daily reversal here, is it? It's not. So it's certainly a possibility. Here's zoom in on the 4-hour chart, right? And we did get a 4-hour reversal here, so not bad looking. I do see that Aussie dollar is starting to go diverging a little bit from Kiwi. I can tell because my equity is going up, and those are two of the trades that I'm in right now. So if you're, Euro Aussie, I do like it higher. 60-minute chart. Probably be worth putting a position in near 44.85, 44.90. 4-hour reversal bar is what that is. Let's talk about that concept a little bit, actually. So I'm gonna pull up a chart with nothing on it. Different package. All right. Here's Kiwi. All right, so I talk about obviously daily reversal, blah 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 blah, all that stuff. Okay, well that happens on 4-hour basis too. All right, and for example, you see the low that we had on Sunday night right here? That's the 4-hour reversal close. It's the close from this bar, which was the low. This would have been the 4-hour reversal resistance, okay, right here, which is where you topped. 4-hour reversal support right here, 65.15. Now, I ended up putting an entry at 65.02, well, because I had sloped down there and this low, and I just made a decision to put it down there instead. Either way, that's an example of 4-hour reversal support. It would have been here too. It never was hit, obviously, but that still would be a 4-hour reversal support. So let's look, for example, at Euro Yen. So Euro Yen actually would not have had a 4-hour, well, it would, but it was all the way down here, and it actually would have worked. As crazy as that seems, 129.78, that was the low right there on that tick. Okay. Let's look at Euro Aussie. Okay, so if you hold up for a little bit, then your 4-hour reversal support is going to be this low, 44.86. Okay, so you can envision if it comes higher and pulls back, finds support here, that's your 4-hour reversal support. Okay, dollar yen, similar story. That's why I had put support at 122.56 the other day. Okay, because it was this close right here, and it was, or this low. Okay, and it was that close. 122.56. Now we never came in and touched it. The low the other day, yesterday actually was 63. As you can see, it was like 8 ticks above it. But you get the idea. Okay, resistance would be this, that close right there. Okay, and that actually so far is actually acting as somewhat of a resistance point at this level. Okay. So just, a concept to keep in mind, especially when you're in a range, because a lot of times the market maybe won't get all the way to the range bottom, and maybe it finds it at the 4-hour reversal bar. Okay, now it's obviously much better if, in at least my experience, if the bar itself in question at the close is a reversal bar itself. Okay, it's better that way than if it's not. So something to keep in mind there. Rather than just looking at any old close, you want the reversal ones, right? The reversal ones are, these purple guys right here, okay? Those are J spikes on 4-hour charts, actually. That's what those are. And did we get one on the euro just now? We did. So look at this. We just got one on the euro. Here's the last number we've had. We've had 3 of them over the last several days. Each one's worked for, actually this one I guess really wouldn't have worked at all because he didn't really go higher. But this one would have worked a little bit. And eventually one of them works really well. Okay, so we do have that 4-hour reversal. Could be ready to send us to the moon on the euro. Kiwi and Aussie. Talked about that in earlier, the different pairs, but what about Aussie Kiwi itself? Well, here we are. I actually noticed, I put this chart up, I guess, earlier in the week when we were up here looking for that pullback. Came down, support, bounced, here we are. So after being short Aussie last night, and as the market started to come in, I was like, well, do I want to go long Kiwi? It feels kind of freaky right here, but I didn't mind it because one reason was the knowledge of Aussie Kiwi itself being at resistance. So going long Kiwi essentially puts me short Aussie Kiwi, and I don't mind that because we're at resistance here anyway. And you could get bigger support over the next couple days down here at 108.20. So you could certainly have, I know it's weird to think, but it's certainly a possibility, that Kiwi could trade higher, while at the same time Aussie stays stationary or goes lower or doesn't really go that much higher. Remember, this is long-term resistance in Aussie. So, if it's going to turn down at all, then it's going to do so here. And if we do get a huge commodity breakout, then at least we have Kiwi on the long side. So kind of how I'm thinking about those things right now. That's where my mind's at. Okay, so Euro Aussie, yeah, I like it on the upside. We'll go maybe see a little longer term here, see what's up on that. Okay, so there's well, that one sucked. Didn't work out too well. We could end up being well above it by the end of the you do actually have this line here though. So it's probably even better where we are right now. Okay. All right, so here's your Aussie scrolling way back. There's the 50 line, support. We're really close to it now. If you zoom in on it, you can see that sometimes you have a scaling problem with this because when you zoom out on, let's look at a different charting package and see where that has it. Let's look at Euro Aussie on a weekly chart. Okay, so here's Euro Aussie on a weekly chart. Okay, right here, you can see this line, the 50 line right here. okay, which crosses down here, here. It does cross here. So we have hit that line. Okay, so this is support in your Aussie right here. Okay. Yeah, so that's, we are at support. We are bouncing from support, I should say. We're about 100 pips off the low, in fact. So if, your Aussie is going to find some sort of a low, it's going to do so right about here, one would think. We have a couple interesting streaks to talk about too. What I mean by that is the fact that Euro Yen really pisses me off about this trade. 1, 2, 3, 4, 5, 6, 7. Consecutive down, 7 in a row. I'm going back 15 years. We were down 7 in a row as of last week. That's never happened before. Not in at least 15 years, okay? So that streak is more than likely primed to come to an end, especially with the support that we've been at. Euro Aussie, not down 7 in a row, it's only down 4 in a row, but you get the picture. Okay. There was a question about pound Kiwi. I'll take a look there. I know I've said this before. I think one reason that it's been, well, the successful trading that I tend to do, or when I do it, it's when I'm looking at primarily dollar pairs, maybe a few big crosses like Euro Yen, Euro Aussie. Okay, after that, you start looking at so many pairs, and you really start to complicate things in your mind. But we will look here at pound Kiwi. Interesting, I pull it up, and there's a line on the chart already. So this was Christian asking this. Major breakdown, what's your opinion? Well, we're actually at support right now. If there's going to be any support, it's going to be here, I would think. Okay, so be careful on that. Again, I think it's better right now to play dollar crosses. I still like Kiwi dollar higher. At the same time, pound dollar is reversing off lows that we just made that seem very panicky. Am I going to say that pound Kiwi is going to go straight down from here? I have no clue. This is a downtrend, but you're at an area where you could get a bigger bounce as well. Okay, even longer term, you might have support closer to 222. So this is one of those where I just wouldn't even fool with it. Okay, I wouldn't fool with pound Kiwi here. There's just too much going on. This median line right here, you're at this median line, which is the downsloping median line. If that breaks, then yeah, you're in a pretty bearish position. I mean, look at what happened last time that you broke through this median line. You broke it, consolidated, broke it, went straight down for a while. So based on my interpretation of Kiwi, which looks to go higher over the near term till at least 67.20, and maybe pound dollar remains low. I mean, I guess pound Kiwi could come off, but again, based on this chart alone, which is what I'm good at doing, is looking at the charts. I'm saying this is at support, but it's not something I really would wish to necessarily trade at this point. Okay, I do. Testing. Okay, so you see these supports that you've got here. here, and here. Okay, and then you had a gap around there too. That's probably your bigger level for pound kiwi, which is close to 220. It's in like 500 pips. You know, um, this is one reason why I don't really like looking at these crosses sometimes, is because look, long kiwi, and it's based on sound, short-term analysis of the chart, and I want to stay long kiwi. I don't want to look at something that suggests kiwi is going to fall at the moment. So based on that, I would say that you're probably headed for that longer term support at 220. Okay, it's right down here. But obviously, a lot of things can happen between here and there. Dimitrov asking about euro pound. Yeah, I like euro pound higher. Again, with the crosses on euro, we talked about those. Or I did the video on Friday. So yeah, I like that on the upside. Okay, so sorry about that. So yeah, I'm of the mind that we are bottoming here with with euro pound. Okay, this is a weekly chart. If you scroll way back, yep, test, test, test. Okay, yeah, so there's a lot here for euro pound to work higher from. And it's a good place for it to bottom. That, and again, the world, and by the world I mean everybody and his mom, dad, grandma, dog, cat, hamster, fish, whatever, seems to be bearish the euro. And I'm not sure that sentiment can last. So for the euro to really, for the ECB to really kill the euro, which I guess is what everyone thinks they're gonna have to like blow this thing out of the water tomorrow, because everyone is just uber bearish on the euro, right? It seems like it's awfully priced as far as that's concerned. Okay, so yeah, I like these euro crosses higher, right? We've also got the power of IDO search behind us, suggesting that the statistics agree with our supports. Okay, on euro Aussie, euro yen, euro pound, whatever. Euro fill in the blank. But why complicate things? Let's just euro Aussie, euro yen, euro Aussie especially, because Aussie's at huge resistance itself, right? Okay. All right, so I'm gonna wrap it up there. Sorry for the sound issue. I don't have these problems when I do it at our own offices, but when I do it different office, it's screwed up. So apologies for that. Get this up and recorded. Again, quick summary. We like again with the dollar, it's not all that clear to me. I mean, we're still in consolidation mode. We found support at where we should have yesterday, right? But again, the euro, when I'm doing this webinar, the euro's making big 4-hour reversals across the board. Still like Kiwi higher, Aussie's at resistance. Maybe euro Aussie's the trade to be, right? We are 4-hour reversal there as well. So euro Aussie might be a good one to look at. We'll have look to have a setup on that later in the swing. It's a trade that I've really wanted to be in for a while, and maybe we actually have the price action telling us that it's okay to do so now. So we'll take a look there. And yeah, that's about it. All right. So I'm going to wrap it up. Mark, real quick, you were asking about the workspaces. So if you have the pro version, you just click on chart layout, and you can see the different chart layouts. Okay, you can make new chart layouts, new chart layout, whatever. That's all it is. So it's this right here. Okay, it's chart layout button. So that's the workspaces. To get some sleep. We've got ECB tomorrow. We've got NFPs on Friday. This week's not over by any means. Okay. All right. Take care, guys. Gals, take care. Have a good rest of the week. Talk to you later. Bye.